Now we are ready to calculate pro forma income statements and operating cash flows. Let's go to our example. Remember, this product, you're going to make sales of $125,000 each year, and gross margin on that product is 60%. That means we get to keep 60% of the sales. So let's go to pro forma income statement. Gross profit from the product is 60% of the sales. Of course, in this example, it's the same for every year. So let's just calculate it down. But we also have a side effect. Each year, there's a reduction of $50,000 of our existing products. And on our existing products, we get to keep only 40% of our sales as gross profits. That means each year we will actually lose, in terms of gross profit, 40% of those $50,000. So I'm going to put actually a negative sign in front. Okay, let's negative 50,000 times 40%. That means each year we are losing $20,000 of those. Oops. Let's calculate the depreciation. We already have done that, but remember we have $350,000. We have 16-year makers. I already made sure that when we're calculating the salvage value, those depreciations were calculated. So let's go ahead and get those numbers. Now we can calculate earnings before taxes, gross profit of the product, plus the loss from the side effects, minus the depreciation. Remember, interest costs are not part of the calculation. They're not relevant for our purposes. Let's calculate the taxes, earnings before taxes times the tax rate here. Right here, 21%. Let's make sure we get an absolute reference on that. And operating cash flow in the absence of interest expenses are rather simple. Take the earnings before taxes. Actually, let's calculate net income first. Earnings before taxes minus taxes. And operating cash flow is simply net income plus depreciation. Remember, depreciation is not a cash expense, so it is not relevant for the purposes of our calculations. Let's make sure we can see everything. For each year, basically, we have our OCF. In our we already calculated the initial cost and what we're going to recoup at the end of the year, at the end of the project. Since net working capital is not going to change during the life of the project, we don't have to do anything about that. In the next short video, we will put everything together.